Hare Krishna.
Do we start?
Yeah.
Good evening, friends. Vanakkam Nandare. Good evening, friends. On behalf of All India Senior Business Associate for South Zone, we are invited for a wonderful session on ULIP, which is the need of the hour. Wherever we go, when we meet youngsters, they all want to take term insurance only. They want the investments in mutual funds. The combination of mutual funds and the term insurance is the ULIP. So, but there are a lot of changes over the period in the ULIP market, and our products also very well designed now. So, this the best person, the Sunil SBA from Manivannan is going to talk about you. On behalf of South Zone, All India Senior Business Associate Forum, I welcome all the participants, our beloved agents, and then branch managers and class 1 officers who are participating here, and development officers, and our beloved SBAs. Now, I request our Zonal Coordinator, Dr. D. Manivannan, South Zone Zonal Coordinator, Dr. D. Manivannan, to introduce the guest. Thank you, friends.
Hearty thanks, Mr. Vijayaraghavanji, State Coordinator of Tamil Nadu. Friends, good evening to you all. We are in this evening to learn, unlearn, and relearn the most potent and most fertile financial market known as ULIPs. Earlier, if you see, ULIPs are not much noticed and were ill-perceived. I mean ill-perceived as those funds which collect very huge charges, very little risk cover, very few fund choices, and below par performances. But in reality, if you see, the pictures are totally different. ULIPs nowadays are perceived and received more as a viable alternate investment. I mean, viable alternate investment opportunity to the mutual funds. ULIPs are a wonderful combination of three things: investment, insurance, and tax savings. Investment, insurance, and tax savings. Let us get to know all these details through our faculty, Mr. K.S. Sunil, today. Generation Y and Generation Z are considered to be the most sought after prospects after HMIs. They are mostly inaccessible to the conventional life insurance sellers like you and me. They lend a deaf ear when it comes to conventional products of LIC. Their choices of investments are mostly influenced by the social media. Social media owners might carry some name before the screen, but in fact, or in reality, they are in the background. Social media in the background are owned by mutual fund houses, which are supposed to pay hefty sums for speaking against the conventional savings of LIC, and they go to the extent of surrendering their existing life insurance policies themselves. The only way to reach these potent prospects is first entering their houses through ULIPs and then the conventional products. Our faculty, Shri K.S. Sunil, will explain all these aspects in detail today. Further, now about the speaker, Shri K.S. Sunil. He was a flight engineer with Indian Air Force. His flying experience, my dear friends, it is 1,800 hours. Let us clap from wherever we are. His flying experience is 1,800 hours. Yes, 1,800 hours of flying experience. He joined LIC as a DO in the year 2007 in Thiruvananthapuram, Kerala, and became a SBA in the year 2012. He is one of the most successful SBAs in the country. His knowledge, understanding, and the clarity of the subject matter are stupendous in nature. Recently, his agent, Mrs. Preeta, became the first LIC agent in the country to number 101 policies. I repeat, my dear friends, to number 101 policies through Ananda in a single day. She is the first agent to number 101 policies through Ananda in a single day. Hats off to Mr. Sunil and his celebrity agent. Originally, his father wanted Mr. Sunil to be a teacher. Primarily, his father wanted him to be a teacher.
You are muted, Manivannan ji, you are muted.
Sorry. Oh, sorry. Friends, I repeat, Mr. K.S. Sunil, he was a flight engineer with Indian Air Force. His flying experience is a whopping 1,800 hours. Yes, 1,800 hours of flying experience. He joined LIC as a DO in the year 2007 and became a SBA in the year 2012. His knowledge, understanding, and the subject clarity are stupendous in nature. Recently, his agent, Mrs. Preeta, became the very first agent of LIC in the country to number 101 policies through Ananda in a single day. I repeat, she became the first LIC agent in the country to number 101 Ananda policies in a single day. Hats off to him and his celebrity agent. His father originally wanted his son, Mr. K.S. Sunil, to be a teacher. And Mr. K.S. Sunil, by fate, he joined LIC as development officer, but he is utilizing his job of development officer from SBA to fulfill the desire of his father. Friends, to talk about Ice Bath is an education forum. It's a trade union. It's not a trade union, basically. Ice Bath's sole aim is to provide the best education possible to the agents, DOs, and SBAs. You can get to meet the best of life insurance professionals in every Ice Bath forum. The knowledge and motivation you will get in these forums will be tremendous. Hence, whenever there is a call from Ice Bath, please attend those classes. We promise you, you will become a champion life insurance seller. Now, over to Mr. K.S. Sunil. Hearty welcome, dear Mr. K.S. Sunil.
Vamsi Garu, small thing. Please mute everyone, Vamsi Garu, because people are unmuting themselves. So please mute everyone. See that only admins can unmute.
1 second.
Okay. Good evening, dear Mr. Manivannan sir, and all other SBA friends, and all other agent friends who have joined the meeting, and all LICians. Thank you for giving me an opportunity to talk about ULIP in this forum. As we are working into insurance industry and insurance business, insurance products are always to cater for any contingencies happening in our life. And today, unfortunately, there is a contingency with me that the PowerPoint prepared by me has lost because of my laptop has stuck. So I'm little bit, in older version of PPT I am sharing with you. I'm sorry for that. I should not start any training with a sorry, but still, that is a fact. So there will be some hassles in PowerPoint presentation because I am doing it through my mobile rather than through my lap. So the subject I have been assigned with is the importance of ULIP in the current scenario. So I was planned to present this presentation for the next 1.5 hours in such a way that we will split this presentation into 4 or 5 different parts, like what is the importance of equity market in India, and what is how the equity market is performing in India. And then what is the market performance of mutual fund industry in India. Then coming back to ULIP presentation, and even in along with the equity market, what are the indexes like BSE, Nifty, Sensex and Nifty, and what are all the Nifty 50 companies, what is the importance of that companies, and then coming to ULIPs. What are all the why we should promote ULIPs, and if we are not promoting ULIP, what will happen with our insurance business? Then we have 3 products with LIC now in ULIP segment. So little bit of that products thrusting upon Index Plus. This was the presentation which I have planned, but unfortunately that presentation I lost because of my laptop issue. Still, I am trying to share you presentation which was available in older version of presentation with me. I am assigned with co-host, this one, right? Vamshi.
Sunil, your voice is muted.
No, I'm not muted. I'm trying to share my screen.
Yeah, you can share. You are trying to share through your mobile.
Yeah, I'm sharing through my mobile. That's what I told. No, I don't have lap right now. Okay. So actually, this presentation earlier was prepared for Index Plus, but this is not having any relevance with Index Plus right now. Only with Index Plus. So we will be going. Is my screen visible to all?
Sunil.
Yeah.
Then you disconnect. I'll share it.
Okay.
You disconnect. I thought you're sharing from desktop. I'll share
No,
it.
no. Okay.
Sunil, go ahead. Sunil, you're there? Sunil got disconnected. Friends, please give 2 more minutes time. He's joining back. Some technical issue.
Friends, please wait for a few minutes. Friends, this class will be in very simple English, in LIC language only. Agents friends, especially from Tamil Nadu, டஃப்பாக இருக்கும்னு நினைக்க வேண்டாம். எல்லாமே எல்ஐசி டெக்னிக்கல் வேர்ட்ஸில் தான் இருக்கும். ஸோ வெரி யூஸ்ஃபுல்லாக இருக்கும். அதனால் கொஞ்சம் இந்த பிபிடி ரெடி ஆகிட்டு இருக்கு, ஒரு சின்ன டெக்னிக்கல் இஷ்யூ. ப்ளீஸ் பேர் ஃபியூ மினிட்ஸ்.
Friends, kindly bear with us just for 2-3 minutes. This mobile has gone every. It must be a real bad day for Mr. Sunil. He has prepared a wonderful PPT, unparalleled PPT, comparison with all companies, mutual funds, what they promise and how they fail to deliver, and what we under promise but over deliver. All those things he prepared, but unfortunately, water poured on his laptop. Incidentally, and the second time his mobile has gone problem, running into a problem. Kindly bear with us, just 2 more minutes. Just 2 more minutes, friends. He will be joining us.
Good evening. Sorry for the interruption. Actually, I got disconnected and then there was a connection error. Okay, let us go back fast into the presentation. Vamsi, can you move the slide to the 40th slide? The 40th slide in this presentation. Before on. Okay, next one before that. Okay, so let us discuss about the growth potential of equity market in India. There are around, actually these figures are little older. I have the latest figures on slide previous, if you can go back. Around 17.5 lakh demat account holders are registered in India. Okay, so that means people are interested into investing into equity market, mostly because of their requirement of more returns, because people are not interested, satisfied with the lesser return they are getting from the bank type products, or bank interests are going down from last 15-20 years. If you check, from around 12% to it came down to 6.5 to 7%. So people are interested more into higher returns, so they are investing more into equity market product. They are ready to take that risk. And even the mutual fund industry, if you can see the last month figure, the total inflow into equity mutual fund is in October 2024 is around 41,887 crores. So you can imagine the enormous fund coming into. And even in the presentation, which shows that as on 31st of January 2024, the total asset managed under equity mutual fund is around 52.74 lakh, which is rose to 67.25 lakh crore in October 31st. So you can imagine the way people are investing into equity market. We can come to the next slide. So the last month, even this shows that January figure, it is around 21,781 crore. However, in October 2024, it was around 41,000 crores into mutual fund industry, which is an unimaginable figure comparing to any other financial market. So, we should find out the potential in this market, and we should also shift our mindset to suggesting customers about our products. So let us go to the next slide. And here you can say this was as per the January figure, it is 14.7 crores of people in India are investing into equity market. But however, by October 2024, it has been increased to 17.5 crore people are directly investing into equity market. So around even only if you can count in Maharashtra, it will be around 3.2 crore people. Maharashtra alone are investing into equity market as per the latest figures. As I told you earlier, the figures which is shown in this presentation is of January. I had my latest figures with me, but unfortunately that presentation is lost. So let us go to the next slide. You can see the FD interest rate in India. If you can see around 99, 2000, it was around 11%. And in 24, 22, 23, 24, it has come down to 6%, or now it is slightly higher by 6.5%. So people are not that much amused with the low returns they are arrived out through this type of financial instruments. Hence, there is a mindset of especially the younger generation, not only the younger generation, even the mid-aged segment people, or even I could find many of the people who are retired. In that age people also depending upon the mutual fund instruments for their pension, like systematic withdrawal plans or something like that. So we also must learn the products, learn the potential of the market, and present our products. And by understanding the product level and the product intricacies, the differences in old ULIPs and the current ULIPs. Actually, we LICians have a mind block because of the setbacks we faced during the year 2008, 9, 10, because of the market collapse, and the ULIPs performed very badly, and all the customers, they were expecting almost 100% growth in 3 or 4 years, lost their money. So this were blocking our mind to present ULIP products to the customers. But you should understand that, and we should understand that the younger generation, they are more into short-term products and more into these type of higher income earning products. They are ready to take risk also. So let us see the next slide. So here I am showing the performance of Sensex in last since its inception. In 1980, it started with 148.25 index. You know, everybody knows here. Majority of the people knowing what is index. So those who are not knowing about the indices, let me just explain a few words about indexes. We have majorly two share markets in India operating equity sales. So one is called the National Stock Exchange, NSE, and the another one is the Bombay Stock Exchange, is BSE. The indexes is the indices shows the growth of the or the performance of the market by selecting a few companies from a selected segments. So in BSE is the Sensex. So Sensex is selecting 30 selected top companies, and their performance criteria is shown as the BSE Sensex. And in NSE it is called Nifty. In Nifty there are two indices. One is Nifty 50 index. So in that 50 top companies are shown for their performances. So here there are we are showing the Sensex indices. So if you can see in this presentation, this is to just come up out of the mind block, just to showing the this presentation. Please come back, Vamsi, the previous slide. So in 1980, if someone has invested in Sensex in equity, in 5 years time, if he could have hold for a period of 5 years, he has earned around 28.89% growth. If it could have been for 10 years, it was around 21.6%. For 15 years, it was 22%. In 20 years, if he hold on for that, then it is 17.87%. 25 years, it is 18.05%. 30 years, it is 17.86%. And in 35 years, it is 15.92%. And 40th year, it is 15.53%. That means if someone steadily held his investment for 40 years from 1980, he is getting a steady growth of around 15.53%. For a shorter period of 5 years, he might have got 28% or 29%, but in a longer period, steadily he is getting a 15.53%. Like that in any year, if you can see, if it is in 1992, 93, you know that there was a very huge scam in Bombay Stock Exchange with Harshad Mehta scam. So there you can say the growth is for the 5 years has come down to 6.95%. Then for the next 10 years, it is 2.59%. But later, in 15 years, it has gone to 14.63%. This is the relevance of this slide. We can go to the next slide. There also we can find in those who someone invested at 1993 for 5 years, it is a minus growth. So here you can see in some few 5 years, you can see minus growth. From 1993 to 98, you can say minus 1.8%. 1997 to 2002, you can say minus 1.59%. And 2007 to 2012, we can see minus 0.86 was the growth. So even all other places or all other years or 5 year or 10 year or 15 year or 20, 25 years, if you can take that group, there you can hardly find 3 or 4 places it is a negative growth. Otherwise, in almost all these years, it is showing a positive growth, even in double digit, more than 10%. So let us see what does it mean in the next slide, even up to even 2022. So here there are 43 segments like this. We are taken for 5 years. There are 43 5 years in these many years from 1983 to 2022. Out of that 43 5 years of period, only 3 period it was shown minus growth. Otherwise, in every period it was showing positive growth. Even if it to take any 10 years of time, it was never shown any negative growth. In 15 years also, 20 years also, 25 years also, it never shown any negative growth. So that what I mean to project here is that for a longer term plans, you can definitely believe into this equity market. and carry on with that investment steadily and strongly, so that you can get in a very good growth and return from all these products. So currently, as on date, as on 29th of November, our Sensex is standing at 79,802 is the Sensex index, and the Nifty has closed at around 24,131. So this is the growth potential available with equity market. Let us come down to the next slide. So I was talking about Nifty 100 and Nifty 50 companies. So in NSE, why I am talking about the Nifty 50 and Nifty 100 very seriously is because one of the best product available in ULIP segment is Index Plus. So in Index Plus, the investment is purely into Nifty 50 companies or Nifty 100 companies. So you should explain to the customers that these are all the companies we are going to invest. So we should understand that these top 50 companies, all these companies' share value is very high. Like if you have to individually invest into any of these companies, you need huge money. So the MRF, you can say, for example, one company which is not in this index companies, but MRF is a company which is having the share value is around, I think, 1.5 lakh per share. So I cannot invest in MRF right now because I need more, very huge amount of money to invest into it. So, but if I want to take the advantage of that companies, you can invest into any index funds and get advantage of all these funds. So Nifty 50 is the top 50 companies. We will find out what are all that companies, and Nifty 100 companies is the next 50, including the next 50 100 companies from different segments. Here you can say Asian Paints, Britannia Industries, Asia Motors, Grasim Industries, Hindalco, like this. Different segment companies are available in this 100 companies. So we will send this presentation to all of you so that you can understand, you can explain to the customers that if you are investing into this product, you are going to get the shares or the ownership of these many companies with your small investment, and you can get the advantage of getting all the profit of these companies' share value. So let us see these are all the Nifty 50, 100 companies. Now these are all the Nifty 50 companies. You see, these are all the 50 companies in the top, like Tata Motors, Reliance, then ITC, Tata Consumer Product, TCS. So different segments. So segment in the sense from the different segments of industry, like financial segment. In financial segment comes SBI, ICICI Bank, even insurance companies. In IT segment, it comes the Infosys, TCS, all these companies. Then steel industries, Tata Steel is there, L&T is there, then construction and all other products. Then vehicle industry, Tata Motors. So you can find all the segments and all the sectors of the industries in India. Then are taken out of these 50. You can find out all the segment companies. So you are investing into these 50 companies, okay, in detail, and not only in that company. When you come in, when you are investing into this Nifty 50 segment, there will be a specified allocation of, the weightage of companies given. For example, the Reliance is given with 10 weightage. That means if you are investing 100 rupees in Nifty 50 companies, 10 rupee will be going to Reliance Industries. 11 point something is the HDFC Limited. So 11 rupees will be going to HDFC. Like that, each company will be given a weightage. So according to that weightage, only the Nifty index is counted. So the investment pattern also goes the same way. Let us go to the next slide. So these are all the Nifty 50 companies. So the relevance of this will come to the when we will talk about the product. We will explain more. So these are all the details of the market cap of these companies. So from these figures, you can understand these are all the high-end companies, or you can say the blue chip companies in India. HDFC Bank, ICICI Bank, Infosys, State Bank, and all these companies, and their market holding is shown in this with the figure. So these are all things you can show to the customer for taking the confidence in them, and for your, whenever you talk to a customer with good knowledge, then only you can convince the customers, because the customer is having in-depth knowledge about the in-depth awareness about these are products, and because they have money, the hard-earned money, they know where to invest, so they will have the knowledge about all these products and all these field. So you should also have the knowledge to gain confidence and gain respect from the customers. So all these market caps are given in this product. So let us see the next slide. So here again the performance of Nifty 50 in last 5 years. The 2019, the index of Nifty was at 10,791 at February 22, 2019, and today this is again as per 15 to 2024. So after 5 years, exactly after 5 years, it was 21,910, and as on date today, it is 24,131. So this figure clearly shows that in last 5 years, it is just doubled, or it is just became more than double in 5 years of time. That is a good sign. Even in last 99 to 24, in last 25 years, if you can see, from 891, it has become around 21,910, and currently it is 24,000. So it is around how many times? Around 30 times, or around 28 times it has grown. So that much market potential is available with these type of companies investment. That is what I want to show. This is these figures I am showing, this data I am showing to gain confidence over you, the marketeers, and to show to get the confidence from the customers. Okay. This is an old figure. Actually, the latest figures it may be differing. This is the Nivesh Plus as on 14/2/2024. It was showing around 17%, 4.5% growth. Even our SIIP and Nivesh Plus. So currently it is around 16%, because there was a shuffling in market in last few months. So still it is holding around 15% growth. Okay. Next page. See. Now, so let us go back to the first slide, Vamsi, for explaining about the ULIP. Okay. So by the time Vamsi is shifting back to the first slide, let me explain about the investment type of how people invest into. Well, there are two type of concepts in investing in equity market. One is a active investment. Active investment in the sense, an individual study about the company, its potential, its P value, everything, and he himself is planning in which company he has to invest, and he is selecting the companies and investing into it. But there is another aspect. So that is the way when an individual alone he is investing. He is consulting somebody, or he is taking decisions by himself, assessing the potential of the company, assessing the value of the company, assessing the PU value of the share, everything, and he is investing. The second method of investing is a passive investment. Passive investment in the sense, he is not taking decisions by himself, but he is looking into someone else who is capable of doing all these things. Like I will tell you an example. In many times when Ratan Tata was alive, many times the news used to come out that Ratan Tata has invested in so and so startup companies. So then people will run behind that company, because once he is investing, this company is having some potential. That is the belief. Or the tycoon in Indian equity market, Junjanwala. So he is no more now. But when he is investing in some companies, people will go behind that by expecting that companies will have good growth, or that shares will have good growth. That is one way of doing passive investment. Another way of doing passive investment is that you are entrusting your investment with somebody, like mutual fund and ULIP. Okay, in ULIP, the investment risk is taken by the fund managers. Even mutual fund also done by the fund managers, and the fund managers will be doing the active investment. So as an investor concerned, for me, it is a passive investment, but the fund manager will do everything. So here in Index Plus, our best product Index Plus, it is one type of a passive investment, because here we have only two types of funds, and one is Nifty 50 and another is Nifty 100. So the fund manager need not to worry about which company he has to invest. He has to straight away go and invest into Nifty 50 companies or Nifty 100 companies according to the selection which I have taken as an investor. So this is one type of a passive investment. So there is low risk of investment, or there is lower charges of fund management charges for this product because of that. That we will see when we are going in depth into the product details. So that is what I was selecting. Once you can go back to the first slide. So please understand, you can explain to the customer also, sir, there are two types of investment method. One is active investment and another one is a passive investment. So in active investment, you have to assess the company's potential, the company's strength, the company's weakness, the P value of the share or everything. Then you have to plan in which company you have to invest and how much you have to invest. So solely the risk is with you. The decision is taken by you. But in passive investment, you may be following somebody, either some knowledgeable person, learned person who is investing in which company. You can go behind him and invest in that companies, or in like mutual fund and ULIPs, you have to select a mutual fund or ULIP, invest with them so that they will select the companies in which they have to select. In Index Plus, this investment is totally passive. Even the fund manager need not to worry about much about the investment, because the investment is solely into Nifty 50 companies or Nifty 100 companies as per the choice taken by the investor. So let us see the ULIP business in India. In financial year 2022-23, LIC has done a new business of 3,786 crores and renewal business of 1,161 crores, and the total linked premium was only around 4,900 crores, which is about only 4.71% of the total ULIP market in India. That means if 100 rupees was collected in last financial year in ULIP, LIC has collected only 4 rupees 71 paise. Rest 93 rupees 30 paise has taken by the private companies. So 95 rupees 30 paise has taken by the private companies. So this is the scene. So 32,000 was the premium collected by private companies in new business, and renewal is around 68,000. So 1 lakh crore premium was collected by private companies in ULIP segment. So LIC's market share in ULIP segment is very, 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 very meager, and people are there to invest in ULIP. If we are not projecting this product to the customer, what are the threats we will be going to face? We can see in next slides. Even in total business, linked and non-linked business, LIC has collected in linked 3,786 and non-linked 2,28,000 crores and total 232. So the share of LIC's total business in ULIP, share of LIC's total business is only 1.63%, whereas in private company has done around total 1,39 crores of total business. Out of that, 32,000 is of ULIP. So their 23% business is from ULIPs. That is why they are getting huge market share nowadays. So in total, around 11% of market share in last financial year is in the new business is from ULIP. And you can see it has come down to 10% only because of LIC's poor performance in ULIP. So 23% of private companies business is from ULIP. So we should also look into the market potential and shift our turn to ULIP business. Let us come to the next slide. Why ULIP? What will happen if we ignore ULIP? If we ignore ULIP, we may lose other market also. When we do not offer one particular type of product, public will have no other option to approach. Because if you are not giving products to ULIP products to your customers, they will approach another private players agent and they will take from that product from them. And what will happen is, after that, this will be an entry point for that agent. Then they will do what they will do is they will sell all other type of product, health or a pension plan or a health product or a conventional product or everything, they will start selling from there on, because he got a convincing answer with an ULIP with higher growth. So if you are not projecting our ULIP products to customers, they will approach another player from another agent from private company, and they will take that product, or even from another LIC agent, through another LIC agent, LIC's product he will take, and you will lose that customer in a long run. By missing ULIP today, tomorrow agents may miss their existing clients also. Even their existing clients will switch over to other agents or other products or other company. They have their own, like, see, we have another wonderful product of called a short-term product, Jeevan Ulsav. Even with similar benefits, with similar features, private companies are selling that their products in a very huge in volume. Why? Because they have gained their confidence through their ULIPs, so they will sell these conventional products also in a huge quantity, in huge numbers, in large numbers. So we should concentrate on ULIP product. Only thing, we should not missell this product. You should present the product in a proper way to the customers who understand ULIP, who understand equity market, and who understand the intricacies and advantages and disadvantages of this market. Okay, so this is the area which I want to highlight. If you are not selling ULIP, you will lose your client in future. What is the advantages of ULIPs? For investing in ULIP, you need not to understand much about the share market or equity market, because and without knowing much about the share market, you can get the advantage of the equity market, because everybody, I know there is a potential in equity market, and there is a huge chances of getting higher profit, but I do not know anything about the market, and I do not know how to invest in market. So this is the easiest way. Not only this, we should not say this is only the easiest way. The mutual fund and ULIP is the best, easiest way to invest in the market. But what is the advantage with ULIP is you need not to have a demat account also. To invest in ULIP, share market or in mutual fund, you must have a demat account. Here, without even having a demat account, you can invest in equity. You can get the advantage of the equity market, and also you can get the returns tax-free. In mutual fund, it is the returns are taxable. Here, we have a tax-free investment chances also with our ULIP product. Let us see in next slides the more advantages. So we were having a concern about old products, right? In 2008, 9, 10, we have a very bad experience and setback with our old products. So that's why we have a concern about selling in our new products. But we should understand that the old products have gone, and the old products have their own problems, but the new products are with the latest features, because IRDA itself has come out with a lot of modifications and restrictions in charges. So the new products are with very, very, very low charges compared with our earlier products. There is no administration charges, policy administration charges in Nivesh Plus and SIP. Even for our Index Plus, for the first 5 years, there is no policy administration charges. And the fund management charges are very low comparing to the market. And all these products are giving the mortality charges will be refunded at the end of the policy term. When we compare our ULIP with the mutual fund, the first objection comes when we say that we have insurance also. This product is giving you insurance also, accidental insurance also. Then they say that for that you will be charging. So you can confidently say to the customer that even though we are charging the mortality charge, when the fund grows above the sum assured, the basic sum assured, then there will not be any mortality charges, and whatever the charges deducted till then will be refunded at the end of the policy maturity. At the end of the term, when the maturity is paid, entire mortality charges are also refunded, other than the rider premiums. Okay, and another additional feature is with the LIC ULIPs are the guaranteed additions. For the first 6th year, 10th year, 15th, 20th, and 25th year, both this Nivesh Plus, SIP, and Index Plus is giving a guaranteed addition. The guaranteed addition rate varies with different product that we will see in the product features. Okay, so there is a guaranteed addition. Guaranteed addition in at the with a percentage of the annual premium or the single premium. For example, LIC is giving 5% guaranteed addition at the end of the 6th year. That means if you are paying 1 lakh annual premium, 5,000 rupees will be added to your policy at the end of the 6th year, at the end of the 5th year, that is beginning of the 6th year. So that 6th year, that many units will be added to your plan or your investment. For example, by that time, if your NAV is 15 rupees by 5th year, then 5,000 rupees divided by 15, that many units will be added to your policy, and that unit will be again growing as the NAV grows. That guaranteed addition also is growing. Okay, so like that, every 5th year there is an addition in the name of guaranteed addition. Low allocation charges, very low allocation charges. You know, in earlier versions in 2006, 2007, I know. I still remember there were a product with ICICI which is having around 80% of allocation charges. Even a majority of products are having 30 to 40% of allocation charges. Now the allocation charges has come down to single digit figures, 5%, 4%, 3%, like that. The allocation charges has come down very meager. So lower fund management charges. Fund management charges were very high earlier. Now it is very low. Then, as I told you earlier, refund of mortality charges. Let us see the next slide. Then lock-in period. Earlier it was 3 years, now it is 5 years. Why 5 years? Because it will take minimum 5 years to have a we can say a favorable growth with your product. Because if you are started withdrawing after 3 years, there is a chance that market has come down or there were a fluctuation in that 3 years. The fund might have not grown positively. So to get a guaranteed return, there is a lock-in period of 5 years. That is a good thing. You cannot liquidate it in 5 years. Refund of mortality charges under SIP and Index Plus. Then concept of discontinued fund. This is a new feature came into the effect in new products with a minimum assured yield of 4%. It means suppose you have not renewed your policy with your renewal premium within the grace period, the fund will be shifted to your discontinued fund. Discontinued fund means that fund will not be invested into equity market. It will be invested into money market instruments, and a minimum of 4% return is guaranteed. Okay. So, and also the IRDA has put a restriction for a maximum reduction in yield. Means suppose if you got a good yield, it cannot be the charges should not have more than this many percentage. So that is what is the maximum reduction in yield. So more than that, charges cannot be levied from that product. So that type of restrictions have been implemented by IRDA. So there is a good chances of higher growth in these products. Okay. Products offers Index Plus offers a share market advantage with insurance cover. That is the one major advantage. This is giving you a share market advantage, and also I am highlighting the Index Plus product because other two products everybody was familiar about because both the products are available in the market since long. So you can have share market advantage and also have insurance cover. The features of the product is that the minimum age entry is 0, that is 90 days to 50 if you are taking insurance coverage of basic sum assured of 10 times of the annualized premium. Here you can choose your insurance coverage in two ways, either 7 times of the annualized premium or 10 times of the annualized premium. If it is 10 times of the annualized premium, then your maximum age at entry is 50, and above 50 you will get only 7 times of the annualized premium as your insurance coverage. And policy term is 10 to 25 years, provided you are paying a minimum monthly premium of 4,000 or annualized premium of 48,000. And minimum term is 15 if your annualized premium is less than 48,000. Means here the minimum annualized monthly premium is 2,500. You can project in such a way that just spending a meager amount of 2,500, you can invest into Nifty 50 companies. So if your investment per month is less than 4,000, then the minimum term is to be chosen as 15 years. But after 5 years, you can withdraw. There is no restriction. Okay. And maximum maturity is 85 years. That means at the age of 60, also one can join. So maximum 25 years you can hold on with the insurance plan. So with the 7 times of coverage. And at 50 age means again up to 75 years only it will be continuing, because 25 is the maximum term. Okay. Vamsi. Minimum premium I told you earlier, yearly it is 30,000, half yearly 15,000, quarterly it is 7,500, and monthly it is 2,500, and there is no limit for maximum. But always better to suggest for minimum 4,000 rupees and above per month, because two conditions, one is about the term and another one is about the guaranteed addition. So these two reasons, so I always suggest the minimum premium of 48,000 or monthly of 4,000. Okay. The basic sum assured, the death benefit, as I told you earlier, either it is 10 times of the annualized premium, or the fund value, whichever is higher, or 105% of the total premium paid. So whichever is higher will be paid. So you need not to worry about that. You can just imagine either it is the basic sum assured, which is either 10 times of the annualized premium or 7 times of the annualized premium, or the fund value, whichever is higher will be paid to the customer. Then maturity benefits, as you everybody knows that maturity benefit is the fund value as on date, the closing date, what is the fund value that will be paid, and total refund of the mortality charges also will be paid to the customer. Next, we have other benefits also with this product. We can choose accident benefit along with that, linked accidental benefit, and fund switching. You can have, even though this Index Plus is having two funds, which is the either Nifty 50 investment or Nifty 100 investment, the flex, smart index fund and smart flexi index fund. That flexi is the 50 and smart index fund is the Nifty 100 investment. So you can switch it to either of these, but 4 switches are only free. More than 4, if you do, 100 rupees per switch is the charge. Then after 5th year, on completion of 5 years, either you can withdraw partially or completely. And there is an option to give the death benefit in installments also. Like settlement option, you can receive the death benefits in installment. And tax benefit, there are, as everybody know, in all insurance products are having 2 types of tax benefit under ATC and 1010D. For getting 1010D benefit, the sum assured should be 10 times of the annualized premium. This is all the basic knowledge. So let us see the charges. As I told you earlier, this Index Plus is having very, very low charges. The premium allocation charge is only 8% in the first year, and 2nd to 5th year it is 5.5%, and 6th year onwards it is only 4%. And this charge is charged at the time of premium payment, and mortality charge is applied on the sum at risk. That is the difference between the insurance coverage taken and the fund value. Suppose your fund value is 6 lakhs and your insurance coverage is 10 lakh, the mortality charge is recovered only for 4 lakh. Okay, deducted, and it is charged once in a month. And fund management charge is 1.35% of the total fund value, that is charged in a daily basis. And policy administration charges is nil for 5 years. First 5 years, not even a single penny is charged as policy administration charges. If you can go and find out with the private players or other companies' administration charges, very huge policy administration charges are charged per month. Okay, so here it is nil for first 5 years. Only from the 6th policy years it is charged. Switching charges, as again I explained earlier, 4 switches are permitted, and for 5th onwards it will be charged 100 rupees per month. And another important point is that, as I told you, we can choose a rider in this accident benefit rider. It is only 40 paise per 1000 rupees. That means for 1 lakh in accidental insurance coverage, only 40 rupees is charged. Earlier it was 50, now it is reduced to 40. It is deducted once in a month. Then partial withdrawal charges, it is 100 rupees per withdrawal is charged for partial withdrawal. And miscellaneous charges, suppose you have not chosen the accidental rider right now, and later if you are choosing it, then 100 rupees is taken as a charge for opting the additional riders. Then so special features are life insurance cover with market returns, and there are 2 types of funds. You can choose as per your risk appetite, and term is 10 to 25. There is a very long term. So actually there is no need of taking 10 years. You can take the maximum term, because after 5 years of lock-in period, you can either partially withdraw or you can fully redeem the product. And accident rider is available, low allocation charges and no policy administration charges for 5 years, and lower fund managed charges. These are all I explained earlier also. So these are all the additional advantages and additional features of our product index plus. Okay. Next, refund of mortality charges I told you earlier. Then guaranteed additions in every 5 years. Then these are all we have discussed earlier also. The partial withdrawal after 5 years, and there is no surrender charges if you surrender the entire policy in between. Okay. Then the concept of discontinued fund. So discontinued means if you are not paying your due premium within the grace period, the product is within the policy is considered as a discontinued one. So the fund will be switched to discontinued fund, and equity investment will be stopped and money market investment will be continued. Even in case there is a negative growth, minimum 4% growth return will be given to you. Okay. Another one thing is that you can revive the policy within 3 years from the FUP. Once you revive, on the date of revival, the policy will be, when the fund will be switched to your original fund which you have selected. Okay. Now, the maximum reduction in yield, I am not going to explain all these things much into detail. You need not to worry about, because you should understand that you can explain to the customer that there is a cap for any charges. So more than that, no LIC cannot charge. So you can securely invest with LIC. Next. So as I told you, there are 2 types of fund. There is a flexi growth fund and flexi smart growth fund. So in flexi growth fund, this will be invested into Nifty 100 companies. There are 3 types of investment. One is government securities, another one is short-term investment in money market, and investment in listed equities. So 40 to 100% can be invested in equity, and 0 to 40% can be invested in money market instrument, and 0 to 20% can be invested in debt funds and government securities. There is no necessity to invest in money market or debt funds. Even 100% can be invested into Nifty 50, Nifty 100 companies. Okay. So let us see the flexi smart growth. The flexi smart growth is the Nifty 50 companies. Initially, we have discussed what are all the Nifty 50 companies, the top 50 companies, which is that is the index companies of the NSE. So they are also up to 40 to 100% will be invested in these companies, and there is an option. Suppose there is a huge slide in market, so the fund manager may shift a portion to money market instrument and government security to have a cushioning effect of our fund. Otherwise, generally 100% will be invested into all these 50 companies. Next. So we were talking about the guaranteed addition every 5 years. So the 6th year, that means on completion of 5 years, if the annualized premium is less than 48,000, that is your monthly investment is less than 4,000, less than 4,000. If it is 4,000, it will come into the next segment. If it is up to 3,500, in that case, the 6th year, there will be a guaranteed addition of 3,000, 3% of the annualized premium. On 10th year, it is 6%, 15th year, it is 12%, 20th year, 15%, and 25th year, it will be 18%. Total, in 25 years, 54% of your annualized premium will be given as a guaranteed addition. So you just calculating about 54% is wrong. You should understand that the 6th year guaranteed addition you got with will be growing along with the fund. So that will be a good figure by the end of the term, end of the maturity. So if the annualized premium is 48,000 or above, that is 4,000 and above monthly premium, in that case, your 6th year guaranteed addition will be 5%, then 10th year 10, 15th year 20, 25, 30, like that. Totally 90% of the annualized premium will be your guaranteed addition. In terms of amount, if you are paying 1 lakh annualized premium, your 6th year guaranteed addition will be 5%, and 10th year 10,000 rupees, 5,000 rupees, then 10,000, 20,000, 25, 30, totally 90,000 rupees. So this rupee also I am telling you again, just understand that it is not 90,000 rupees, because the 5,000 rupees I got it at the 6th year will be growing. The 10,000 rupees I got at the 10th year will be again growing. The 20,000 rupees I got at the end of the 15th year will be growing. Like that, that amount will be growing. So you cannot blindly take it as 90,000 rupees if I am paying 1 lakh rupee annualized premium. Okay. So you just understand that that is the way the guaranteed addition will work out in this policy. Next, okay. Now, suppose 2,500 is your monthly premium, then 3,000 will be 3 lakh will be your natural risk cover, and 6 lakh will be the accident risk. Like that, it will work. So if you are paying monthly premium of 10,000, your insurance coverage will be 12 lakh, and the accidental insurance coverage will be 24 lakh. Like this, the insurance will be worked out from day one. We should understand that mutual fund. If you are investing in mutual fund, say 10,000 rupees, I am investing in mutual fund per month in SIP. If anything happens to that customer, the nominee will not get other than the invested amount fund value. Here, 12 lakh will be given to the nominee, and if it is an accidental contingency, then 24 lakh will be given to the nominee. So that is the advantage with the ULIPs with LIC. Next. What is the benefit of monthly mode? So SI, why you called it is SIP, systematic investment plan? So even our conventional plan can be termed as systematic investment plan, because you are consistently, systematically investing every month or every quarter or every half yearly or every year. That is what is called a systematic investment. But in ULIP or in mutual fund, what is the advantages of systematic investment per month is the rupee averaging. So because the market will not be having a steady movement, it will grow up, come down, grow up, come down. It will be in a zigzag way, it will be growing. So as it is going in a zigzag way, it is having life, it is having growth. Okay. So if it is growing steadily only in a straight line, people will not have profit. So market should grow in ups and downs. So you should invest in down and you should redeem in up. So even the ECG, your ECG, if it is going in straight line, means it is dead. So it should go in a zigzag way. So if the market is lively, it will move in only in a zigzag way. To take that advantage of the zigzag way, it is better to have a monthly mode. So you can see how it is worked out in monthly mode. So advantage of monthly mode is that automatically it is deducted without our knowledge from our account, and the lapsation will be minimal because it is deducted from account. So next slide, the averaging concept is given. For example, January I have started an SIP, our SIP or Index Plus with 40,000 rupees premium. So I got with a 10 rupee NAV. So 4,000 units I got, just imagine. So next February also I have put 40,000. So it was, by that time it grew to 10.5 NAV. So I got around 3,810 units. Like that it is growing. So when June, when it came, my NAV has come down to 9 rupees. So I got around 4,444 units. I got 4,444 units more than the initial day. So like that it was growing, then further it was growing. So at the end of 12th month, totally I have invested around 4,80,000 and I am having 45,000 unit and at the rate of 12 rupee per unit NAV. So my NAV, my average unit value is even for the entire year 12 months, if you can see averaging, it will come to 10.65 and my total fund value will be around 5,40,786. So this is the way it is calculated. So means suppose if some month, if the market has gone down, the NAV has gone down, so I will get more number of units and that number of units will be growing in future, so that there will be an averaging. That is the concept of averaging in SIP. So advantages of average will be available if you are taking in a monthly mode. Partial withdrawal, we have discussed earlier also. I am just refreshing very fast. After 5 years, you can have a partial withdrawal. A withdrawal can be in the form of a number of units. You can withdraw this many number of units or this much amount. Whichever way you want, you can withdraw. There is it is not a loan. It is withdrawn means withdrawn. You cannot repay it back. Okay, there is a restriction for withdrawal also. Conditions put on withdrawal. We can see in next slide how it is. So withdrawal will not attract any interest also, as it is not a loan. The next slide we can see about how much percentage of the fund you can withdraw. If you withdraw partially, if in case of death after the partial withdrawal, that last 2 years partial withdrawal amount will be deducted from the death sum assured. So the basic sum assured minus last 2 years partial withdrawal or the current fund value, whichever is higher, will be payable. Then after 2 years, again the original basic sum assured will be continuing, and mortality charges also will be levied accordingly only. Okay, once you are having partial withdrawal done, then mortality charges also will be reduced because of the it will be accordingly the mortality charges will be levied. Okay, let us see the next slide about partial withdrawal possibilities. In 6th to 10th year, you can withdraw up to 20%, and 11th year to 15th year you can withdraw 25%, and 16th year to 20th year you can withdraw 30% of the fund value, and 21st year to 21st to 25th year you can withdraw 35% of your fund value. Okay, so this is the maximum possible limit, and but there is another on cap which is given. The minimum balance has to be kept with within the fund. That is, if your annualized premium is lesser than 48,000, then 4 annualized premium equal to that amount should be available back into the fund. Balance should be there. And if your annualized premium is more than 48,000, 3 annualized premium should be there. Balance you can withdraw according to that percentage available. Switching from one fund to another, in my opinion, in this index plus, the switching doesn't have much relevance because there is no bond fund or such type of balanced fund. Only 2 funds, both are in equity. So better to continue with your fund. There is no much difference in switching. Still, if anybody want to switch from flexi growth to growth, then you can have either from Nifty 50 to Nifty 100. 4 switches are free, and 5th onwards 100 rupees charges will be there. Then discontinued fund, earlier I explained, once again it says that within 5 years, if you are discontinuing, if you are not paying your premium within the grace period, automatically this will be going to the discontinued fund, and the communication will be sent to the customer to renew, and also about transferring the fund to discontinued fund. In next slide, it will be clearly explaining about that the kind of policy, the fund will not be invested in equity, and only after 5th year you will be given the money back. Up to 5 years it will not be given back. And if After 5 years, it is discontinued. Again, it will continue as in a discontinued fund with the minimum possible growth of 4%. Maximum, whatever available, it will be there, which will be given to the customer. Okay. Again, it is calculating all the intricacies about the discontinued fund, and this one I am not interested to explain much about into it, because we need not to go much detail into all these things. Only thing, once the fund is transferred to discontinued fund, fund management charges only will be deducted, no other charges. And that fund management charges also will be only 0.5% of the fund value. You should, and that means what is the advantage of this? Suppose you got a very good growth, you don't want to continue with the risk, you can switch it to a discontinued fund by not paying the premium, so that minimum growth is assured after that. Okay, and no charges also will be deducted. Unit fund value of the discontinued fund policy or guaranteed amount calculated using the minimum guaranteed interest rate will be available to the customer in case of the fund shifted to discontinued fund. This is understood by everybody. It is a normal common sense thing. Okay. If the policyholder applies surrender within 5 years from the DOC, he has started the fund, but he is surrendering within the 5 years, then the fund value would be transferred to discontinued fund. So if he is applying for surrender also, then also it will be transferred to discontinued fund. And on completion of the lock-in period of 5 years, this will be given back to the customer. Okay. If the policyholder applies surrender after the lock-in period of 5 years, then the fund value will be paid to the customer, and there is no discontinuance charge applied. Within 5 years, if you are discontinuing by surrendering, there will be a discontinuation charge. Okay. The grace period, as you know, 30 days for all other modes, including yearly, half yearly, and quarterly, and 15 days for monthly. Please understand that on completion of the grace period, the policy is lapsed, and health declaration is required for paying the policy thereafter. Okay. And you can revive within 3 years from the date of FUP. Once the policy has been, all the fund has been shifted to discontinued fund, if you are reviving it, it will come back to the original fund, whichever you have chosen, whether flexi growth or smart flexi growth, whichever it is, that will be coming to that fund. Okay. Next. Settlement option. The policyholder can opt for a settlement option in death claim. Either, that is 5 years period only. Suppose the policyholder chooses for 5 year settlement. In case of death within the policy term, the death benefit will be given in 5 year installment, which he has chosen, either monthly, quarterly, or half yearly or yearly. Next. Now we were discussing about the tax benefit of ATC and 1010D. Please understand there is a cap on premium nowadays for ATC or to avail 1010D. For conventional policies, it is 5 lakh annualized premium, and in ULIP, it is 2.5 lakh for 2,50,000 annualized premium. So if someone is there to invest more money, you can split into 4 individuals in that home, or 5, even how many number of people are there in that home, you can divide it into different lives and limiting to 2.5 lakh, so that he can get a tax-free return. Even if it is a very huge amount returning from ULIP, it is tax-free, provided your annualized premium is within 2.5 lakh. If it is more than 2.5 lakh, the maturity will be taxable and 1010D is not applicable. Okay. Next. The special about index plan is there is more exposure to share market, and that exposure is to Nifty 50 companies and Nifty 100 companies. And in the beginning of this presentation, I have shown you how Nifty has performed in last 5 years and last 25 years. So you can understand that the Nifty performance is very good in last 5 years, and the market is steadily growing. So definitely this product is giving more exposure to equity market with a solid, you can say, stability, It will not have much risk like any other ULIP or any other mutual fund, because they are investing into all mid segment and low segment companies. Here, mid cap and low cap companies. Here, we are investing into top 50 companies. You know that 50 companies, you can explain, and majority of the time customers ask in which companies you are investing. So with index fund, index plus, you can show to them these are all the 50 companies we are investing, sir, and with the weightage also given in the presentation. So more risk and more return, and returns of the market growth as well as the insurance coverage, provided your investment is within 2.5 lakh per annum. Okay, next. Mutual fund industry, this we have discussed, all these points we have discussed. So I am coming into a conclusion of the product with these points, summarizing by saying that in India, around 17.5 crore people are investing with the demat account into our equity market, and around 67.25 lakh crore amount is invested in mutual fund industry, which was grown in 2014. In 2014, mutual fund was AUM, the asset under management was only less than 11 lakh crore, and in 10 years, from 11 lakh crore, it has grown to 67 lakh crore. So you can imagine it is more than 6 times growth is happening in mutual fund industry. That means people are interested to invest in equity products. Only thing, we are not familiarized with this product, or we are not familiarized with the product details and the avenues available with the equity market and the possibilities in equity market, and we lost our confidence because of our setbacks in 2008, 9 or 10 during that period, and the product, because please understand that the new products which is launched now, like Index Plus, Pension Plus and Nivesh Plus. Okay, these 3 products are having very low charges and guaranteed additions and all other features. In Pension Plus, you can even give an elderly person aged up to 75 without any medical. A regular premium policy can be given through Pension Plus policy. So such an advantageous products are available with us. So please concentrate on to ULIP also along with our conventional products. If we are not concentrating on to such products, we will be definitely losing our existing clients, because if we are not telling them about the available market and available opportunities, they will search out to new customers, new companies and new products. Thereby, we will be losing our conventional policies also from them, because once they are getting a agent with all the high growth, product with high growth, these people will be accepting that agent's advice only. So let us go into such a type of a product like Index Plus. I am highlighting much for the starters, especially the youngsters, and Nivesh Plus for single premium products, and Pension Plus for even for elderly people. There is a mind block with the Pension Plus that it can be converted only into pension. It is not like that. You can withdraw 60% of the amount at the partial withdrawal or surrender or maturity. Apart from that, you can also have partial withdrawal. So what you can do is you can do partial withdrawals, then you can have a 60% commutation. Then if the leftover portion is not sufficient to get the minimum pension, that amount also will be given back to customer by LIC. So there are a lot of USPs for these product. Or Index Plus. There is no other product in the market where you can have a investment in equity market with a meager amount of rupees 2,500 per month. With 2,500 rupees per month investing, you can have the advantage of Nifty 50 companies. So that is the advantage. Invest even small amount, get the advantage of Nifty 50 companies, get your possibly get your investment doubled in next 5 years, because Nifty has shown a growth of double growth in last 5 years and more than 7 times growth in last 25 years. This is what is the presentation about ULIP and all our products. I am not going into other two products of Pension Plus and Nivesh Plus deeply because everybody knows it. Here in Index Plus, I am thrusting because this is the latest product and showing much higher growth than all other products. Thank you. Thank you very much. Over to Mani sir and Vamsija.
Excellent presentation, Sunil. You have covered the maximum possible areas in the shortest possible time possible. And there were 2 or 3 areas which we have not heard of. All those areas also you covered today. Wonderful level. Vijima, has anybody raised any questions here? Hello? One question has come, Sunil. LIC has now started messaging the monthly deduction of charges, which is unnerving the policyholders and making them do calculations of how much has been deducted. How do we handle this? Objection. Sunil, are you hearing us? Sunil, are you hearing us?
Okay. I was not able to unmute myself.
Okay.
See, that is what I was telling from the beginning. There are charges. While presenting the products itself, we should educate the customer about the charges. There are a meager charges, and majorly the charge is coming for the mortality, and these mortality charges are refunded at the end of the policy term. And also, to offset the charges, we are giving guaranteed edition. We can very well explain to that. We are giving guaranteed edition to offset the charges also. So definitely there is a charge. Even any other products are having charges, but here we have very less charges. Initially, for the first year, it is for 5 years there is no policy administration charge. Only policy fund management charge and mortality charges are deducted. This will be messaged to them frequently. So you should explain to them why we should hide. Once it is explained in the beginning, there is no confusion.
So now for every investments, the black and
every investment, these charges are shown by all the investors. They are compulsorily should be shown. Even the benefit illustration is showing all these charges. So why should we hide? Even while presenting the product itself, we should educate them about these charges.
Sunilji.
Yes.
Am I audible?
Yeah, audible.
It was a wonderful presentation, Sunilji. Friends, what I would like to add upon what Sunil had said is, we do not know what are the percentage or what are the expense made by a mutual fund. We do not. They don't just reveal all these things outside. Okay, friends. One point I would like to say is that if you take a mutual fund online, it is the commission of mutual fund agents is less than 0.5%, and they work on volumes. As Sunilji rightly told, it is almost 62 lakh crores is the fund. If our agents, LIC agents, can concentrate on ULIP plans, friends, we can definitely bring in the minimum 30 lakh crores can be brought to LIC ULIP plans, no doubt. It's a huge volume, and no doubt our premium, our commissions will grow multi-fold, my dear friends. Thank you, Sunilji. It was a wonderful presentation. And one more thing I would like to say is that
I am sorry that my original presentation I could not show here because that was having more point. I was giving a final touch to that presentation. By that time, I lost my lap.
Sunilji, I would like to tell you one example. Myself and my agent had canvassed for a 3 crore Jeevan Umang. and we got a check of 24 lakhs from the client. While getting a check of 24 lakhs, there was a person sitting just near us, and he got a check of 8 lakh rupees. And we knew we knew he is from HDFC. We knew he is from HDFC. Okay. Then, the customer was very close to my agent, and once the HDFC person was sent off, and we had a coffee, and I just asked the customer, sir, give him 8 lakh rupees check. What is the policy? And he said, no, it is a monthly premium. It is a ECS of NACH of 8 lakh rupees. So that is the premium which goes out of us, my dear friends. So it is a wonderful opportunity. Thanks for the Eyes of South Zone for conducting excellent meeting. Thank you, Sunilji. The takeaway point for me was like the entire mortality premium which has been deducted has been repaid to them. Everything is repaid, and the charges are much less than the mutual fund also, my dear friends. Because the mutual fund charges are not explained outside. We do not know, and we are missing a gold mine opportunity by not selling ULIP plans. We are missing a gold mine opportunity. Thank you. Thanks a lot, Sunilji. It is wonderful session.
Satish, one more point I would like to highlight is that even if there is no guaranteed amount given by mutual fund products, if you are losing also, if you are gaining also, their charges they will take.
Yes, definitely.
Yes, that's what. Yeah.
Here
again,
we are giving something guaranteed.
Yeah, here again, for discontinued funds also, the minimum, see, for example, discontinued fund, the minimum guarantee is 4%.
4%.
And if the market gives you more, that more value is given to you.
Yes.
The minimum guarantee is 4%.
Whatever the charges deducted, no, any complaint comes like that, or any inhibition from customer, you can explain about the guaranteed addition. The guaranteed addition will surely offset all these charges.
Yes, sure.
True, absolutely.
So one question from TSVS Venkats. Sunil.
Please.
Regarding switching over. Supposing the switching over is preferred for gaining higher returns, whether all the already allotted units will be gaining higher value, or only the units allotable after switching over will gain the higher value.
I could not get that.
Shall I answer it? Sir, shall I answer it?
Yeah. What was the question?
Supposing switching over is preferred for gaining higher returns. Okay. Whether all the already allotted units will be gaining higher value, or only the units allotable after switching over will be gain higher value.
Allotable means
switch over பண்ணும்போது என்ன ஆயிடுனா யூனிட்ஸ் வந்து கம்மி ஆயிடும். Suppose if you are switching to a higher value, the number of units will be lesser. First of all, you need not switch over also. Switch over தேவையே கிடையாது. I'll tell you why. Because as far as SIP or other fund is concerned, what LIC says is, it doesn't say you 80% or 60% or 40%. It says 60 to 80.
Maximum up to 60.
60 to 80. It says 60 to 80. So in that itself, there is switching. If the market is good, LIC will invest up to 80%. The market is bad, LIC will come down to 60%. So switching is automated there. That is the best advantage of investing in LIC's ULIP plans, my dear friends. The funds are automated. So you need not bother about switching it off.
Units allotable after switching over will gain the higher value. I think this.
See, it will gain, but the units will come down. No, definitely units will come down. With if it is 8 rupees, and if you want to switch to something 10 rupees, definitely
number of units will come down,
but the units will come down. After that, it will start gaining.
Okay.
Thank you.
Venkatji, is it okay?
Even we can check with our old products. Okay. There are some products where the balanced fund is performing much higher than the growth fund. Without even switching from that fund, you can get more. I'll tell you an example about that fund, which was that. I'll tell you. I think Profit Plus. The Profit Plus NAV, if you can check, the balance fund is much higher than the growth fund.
चाहते समय तो फिर छुएगा ही तुम लोग।
Friends, did you understand that?
हाँ वो आया
Sir,
था,
please mute Vasant Bajaj.
बहुत खुराफात हो गया। इतना हल्ला।
So Ajay Gupta is asking a comparison of returns of Index Plus with Nifty Passive Mutual Fund.
I think that the time has not yet arrived to compare with that, because we just, I think, how many months? 8 months only passed with this product.
Yes. Vasant Bajaj, please.
We need to wait and see how our fund is performing. It is only 9 months past, and in last 3-4 months the market is so volatile.
Yes.
This is not the right time.
It is not the right time to check.
Sir, one more thing.
Even then, it is giving around 12% return. Our product is giving around 12% CAGR.
Sir, one of our friends has asked, the mutual fund charges are very less. But the mutual fund usually they don't reveal the mutual fund charges. Friends, for a kind information, mutual fund, the fund managers are paid in crores. In crores they are paid. Okay. And the fund managers are paid in crores, and they are manipulated by companies. The fund managers are manipulated by companies. So always, like LIC, you will have strong belief on LIC. Definitely, we will never cheat the clients, because we know insurance and we know India better. Thank you.
Even you can visit some of our agents can visit chartered accountants or mutual fund brokers. If you visit their houses, if you visit their offices, you can see a BMW worth 1.5 crores. This BMW is sponsored by Tata AAG. We attach Tata with the moral values, but Tata AAG has been entering into a practice, and whoever chartered accountant ensures the maximum surrender of life insurance policies, he is being bestowed with Mercedes-Benz. I know of 3 big chartered accountants in Chennai who were until yesterday selling LIC, but today they have started selling mutual funds. They have been compensated with the BMW. That is the moral practice of mutual fund houses. That's what I was about to say in the beginning itself. No, most of them are.
Shall we ask Nedu to give total?
Friends, anyone else has a doubt?
Yeah. I'm Ajay Gupta here.
Yeah, Ajay.
Can I ask?
Definitely.
Okay. So the first aspect is, even in considering the Section 1010D tax benefit, we come across many people who say that mutual fund directly investing, especially in the direct plan, even if you take a passive, Nifty fund, that is giving higher return. So when I try to do the calculation, a regular mutual fund plan versus our Index Plus, is giving slightly better return. But when it comes to direct plans of mutual fund, and assuming that both are growing at the same rate, because it is a passive fund, so that started giving higher return. So Sunil ji, how do we overcome this objection that even though mutual funds are taxable, that will give you higher returns?
That is true, sir. That is true. Though the funds which is, you're talking about the index funds and comparing with the index funds and other funds, those who are investing directly. See, in that cases, I feel, that is what is my understanding. I may be wrong also. They are investing into low cap companies and or in such type of a company where even the risk element is very high. You may be getting good returns right now, but in times of an issue, you will be losing also heavily.
No, Sunil ji, I am talking about apple to apple comparison.
Okay.
It is about putting it into Nifty passive mutual fund. It's not active fund.
Okay.
Nifty mutual fund versus our Index Plus.
Nifty, but See, in initial stages, our fund was giving a very high growth, right? Index plus was giving a very high growth.
Yes.
So
20,
in last
24,
3
26.
months, it came down. So what I mean to say is, there may be an investment pattern change in last 3 months because the market doesn't fluctuate that much. So we need to wait and watch how this fund is growing after 1 year. That is what is my assumption. Otherwise, what you said is right. Such type of a fund will be giving, maybe giving more growth than Index Plus right now. But it has to be seen how it is going to perform in coming days.
Sunilji, can I supplement to your answer?
Yes.
Ajayji, I would like to supplement what Sunil has said. As Sunil has said in the right way, because like every fund manager has a different, even if it is Nifty or you take every fund manager has got the independence of investing in Nifty. For example, if a person who has invested in Adani the past few days have gone a shortcut, right? So there is a probability that particular fund manager who is investing in some other stocks might increase. See, again, mutual funds are subject to market risk. That is the main thing you should understand. First point. So, like one fund, you compare so many, how many mutual funds are there actually? There are more than 2,500 mutual funds. Are every mutual fund giving a profit? No. It is only 50 or 60 funds which are growing better, depending on the investment where they make, and it is their day. I call it is their day. We cannot say what will happen the next day. Even a Nifty 50 stocks might come down below 50 also. It is purely risk. That is what we say to the clients, to our clients, right? So what here I want to tell, let me finish it off. What here I want to say is that, see, once you start investing, the only advantage in LIC is that we have strong experience. It is as simple as that. It is all the days count. It is all like playing a rummy. If your day is good, fine, it's good always. There is always a risk. There is always a risk. And one more point
moreover, we have a leverage of 40% of investment in money market and
one more point, I'll tell you. One more point, let me finish it off. Friends, we are selling insurance. Don't compare, please. When the customer says that is giving much, tell him, yes, you're right, sir. Absolutely right. You're 100% right. That is getting a better return. I am not asking you for the entire 100 rupees. If your investment is 100 rupees, don't ask for 100 rupees. Yes, sir. What you said is absolutely right. It is giving more, no doubt.
They are selling insurance.
But what I'm telling is, you give me 40 rupees, that is enough. 60 rupees you invest there. I don't mind. You invest, give me 40 rupees. So that compromise should be always there, because definitely some other fund might give you better results, no doubt in it, because it is order of the day. Thank you, Sunil.
No. I think just one moment. Let me complete it. I think I didn't make my question very clear. I'm talking about 12% return, projection both for Index Plus and as well as a mutual fund with a passive. There are two types of funds, active and passive fund. So passive fund also grows in Nifty only. And if you compare at 12% both index as well as that one. So when we met a client, he said immediately he took out a SIP calculator and he asked us what kind of fund is this? We said it is a passive Nifty 50. So he put it into that and said that if I invest here, I'm getting a higher return. So that is my point. There is no fund manager involved in a passive mutual fund. So, and the charges are also very, very low over there. So that is where we were not able to get the conversion, because that client is having sufficient term insurance also. That's the thing. You might get a
got it.
You might get a similar thing, because in Bangalore, the awareness level financial literacy is very, very high. People immediately go into social media, then they use the SIP calculators. They say, what is the return you are giving? They don't look at what is the IRR. They say the similar amount, similar premium, similar amount, I put it into this SIP. What is the return I'll be able to generate? and both are 10% or 12%, whatever.
Did they
But,
minus the insurance premium? Term insurance premium, did they minus?
Yes.
Yes. No, over to Nedu. Is waiting.
But Ajay Bhaiya, one point it has to be noted here. RBI has recently published one statement where 85% of the investors in mutual funds do not stay for more than 2 years. If all the mutual funds are giving or bestowing customers with so much returns, why 85% of the people should opt out of their mutual funds? This is official statistics from RBI. 85% opt out of their mutual funds in the very second year. Many questions have to be understood in this.
True. That is basically about managing the investor behavior, because it is the fund return, not the people who have invested, getting that kind of return. Like, in Templeton, they did a big survey about people who have got the highest return. Templeton, America. There are only 2 class of people who got the highest return. The first set of people are people who have died. And they have not claimed the money. The second set of people are people who have invested and forgotten that they have invested in the Templeton.
Yes.
Only these 2 segment of people got the highest return.
I have a sample study about this particular aspect. I will send you. Index Plus.
Sir, I would like to tell you regarding this that life insurance is sold on love and affection. Mutual fund is sold on commercial as well.
Yes.
Basic things. Okay. Now it is the quality of the agent who can prove love and affection wins over commercial. Simple as that. Thank you.
Over to Nedu.
Yeah, can I start?
Yeah,
yes, ma'am. I request Nedu.
Friends, Vanakkam. This is Nedu from Chennai. Sir, actually, as thanks to ISBA and arrange this type of training program. See, we have been covered that outline of our Index Plus as well as ULIP policies. Say, I know that we people are very strong in insurance. We are not going to sell any investment products. We are selling insurance only. Out of the thing that we are being adding that investment also. We at par with bank people. Our investment is also with par with bank. We are better We are giving better investments only. It is a technical subject. Whatever it is, we try to convince our agents to get it in that competing with mutual fund people as well as private people. Our market share is only 4%. We have to fight with 96%. We have to fight with them. So this is the outline only. Each and every DOs and every SBAs kindly take this PowerPoint and keep your agent sit in front of you, explain what is what. See, as I said, Ajay told that is apple to apple. We are not comparing the apple to orange. We are comparing with apple to apple only. But one thing we are giving extra is the insurance. You can say that the term insurance policy and other thing. But we are also having the same product which will be giving the insurance. So let it be. Whatever it is, don't get confused. Don't get thing. One thing I used to say that this is the month of December. Still, we got 4 months. Then people want to do MDRT. We got only 1 month. So my appeal to all my agents, this is the time to wake up. This purpose of this ULIP training is for knowledge only. See, you must, in front of the customer, you should not say, I will ask and I'll tell you later, this and all. No. Something, what is what? What is Nifty 50? What is Nifty 100? What is our CAGR? What is our allocation charges? These and all basic things. You can know that much only. Because the customer is expecting something from us. What is what? So whatever it is, if you want to go for the ULIP policy, you call us and you can equip ourselves. We can go talk, learn those things and all. One thing I want to tell you that this month of December, you must, in front of the customer, every day, fix a target. Focus on that. Whatever it is. If as being a person who's a warrior, if you go into the war, you must know what is what. You must know all the equipment you can able to operate. What is what? You can ride horse. You can ride the elephant. You can use that sword. You can use that AK-47 or tanks and everything. One agent must have this much of potential knowledge. They can handle anybody. This is the knowledge. Because of lack of knowledge, only we people are leaving that business. So this is the initial stage only we have been started. So I appeal to all my agents as well as my SPS. This is the month, the very crucial month. We have to be in the market with a very, very strong and very, very determination. It is that I used to sell that my team. Do you know the speed of running dog? It is depends on it depends on the that is chasing it. One dog will be earlier. துரத்தும் நாய்கின்ற வேகம் என்பது ஓடுகின்ற நாயை பொறுத்து இருக்கு. அது எது ஓடுது விரட்ட இந்த நாயோட வேகம் அதிகமா இருக்கு. So like that, this our target is what if it is target is fixed, we have to chase like anything. That target which what we fixed within our control, we will be able to do what is what. Say 100% effort, 100% result will be coming in that month of December as well as March. Please, I request all my people, 100% you go with your target, and you be the market every day, whatever it is. Don't calculate your commissions. This is a 4.5% commission. This is 7.5%. This is 14%. Nothing doing. Go in front of the customer, meet people, ask people, get something. You will be getting something because all the private people and bank people, every day they're meeting people. Whereas we people among us, we will talk and we are not we are telling stories and not going to meet people. This is the drawback for us. We are very, very mammoth in that financial sector. Our LIC, our life and our previous stories, everything is very, very well. Company is very strong. What about us? We have to make ourselves strong and go into the market. Let us do wonders this year. Thank you very much, friends. 100% this year will be a very, very flourish and fantastic year. This will be. Thank you very much. Thank you, friends. Thank you. All the best.
Friends, hearty thanks, Nadona, for the wonderful summary. I thank from the bottom of my heart, Mr. Sunil Ji, who would have spent at least 2 or 3 days in preparing a wonderful PowerPoint presentation. But unfortunately, we are not able to use that wisdom, hard work, and knowledge just because water is spilt on the laptop. And he will be sending us that revised PPT, which we will be forwarding to everyone. Second, I convey my sincere gratitude and thanks to Mr. Vamsidhar, Visakhapatnam SBA, who has stood with us whenever we have requested him, and he provided us the Zoom link as well as the YouTube connection. Thank you, Mr. Vamsi, and Mr. Vijayaraghavan for doing all the coordination, and all the development officers and SBAs and agent friends who have bothered to assemble here to gain knowledge. And despite few lapses, 1 or 2 lapses, the program really went on well. A lot of insights we have learned from this program. Thank you, Sunil Ji. But for you, this session would not have come to such a large panoramic size. Thanks to your hard work, thanks for your concern, thanks for your interest, and above all, thanks for your dedication. Thanks a lot, my dear friends. Thank you so much. Thank you. Good night.
Thank you.